Well, I think just carrying on from what His Excellency said, I think the key there is to have guardrails. I think fair, transparent markets have been the reason why you haven't seen more systemic issues in the current market than you currently have. Take 2008, for example, when we had a variety of challenges, systemic issues in financial markets. What happened post-2008? The advent of central clearing. When you look at the credit default swap market, which is something that our parent company actually pioneered at ICE. Why you don't have that issue today is because you talk about the crypto markets. Those haven't been adopted by institutions. Why haven't they been adopted by institutions? Because there isn't the guardrails that have been telegraphed for other financial instruments. Requirements to go on exchange, requirements to be centrally cleared. Those models have been battle tested through multiple financial crisis. Buyer meets seller, seller meets buyer. There's a central counterparty that guarantees settlement. And if you look at the issues over the last few months, in particular with the FTX bankruptcy or whatever the case may be, there isn't a central counterparty that's ensuring someone is the buyer to every seller and the seller to every buyer to guarantee settlement. So I think the more traditional financial models, the financial structures, such as the exchanges, the clearinghouse, have shown to be, again, the beacons of transparency in challenging, in volatile markets.
Okay.
I think the financial regulators have done a good job on the capital requirements when banks trade those more risky instruments that don't have a central exchange model or a central counterparty model to put up additional collateral, to treat differently on those bank balance sheets. I actually think State Street has been a perfect example of where financial innovation in a regulated market has worked well. I mean, they pioneered the ETF market 30 years ago. And you talk about an instrument that has added transparency to illiquid asset classes, particularly like the fixed income markets. We need the regulators to tell us what the guideposts are, what the rules are, what the regulated framework is to bring them into more traditional structures, into more traditional ways of execution.